A study of Bitcoin bear markets. The 2018 crash is the second longest bear market for Bitcoin in history so far. And in this chart, it's tracking the days until all-time highs. So the 2014 through 2017 crash had the longest path to the bottom and a slow recovery until it went parabolic. And that's what we've all recently witnessed as Bitcoin climbed to nearly $20,000. Prior to that, the only crash of this magnitude was from 2011 through 2013. And in today's video, we'll study these two crashes and recoveries to glean an idea of what may lie ahead. Will Bitcoin hit $4,000 before $20,000? Or is it dying altogether as Robert Shiller thinks? Let's start by looking at a brief timeline of Bitcoin crashes. In June of 2011, Bitcoin crashed from $18 to as low as $2 for a negative 88% return if you bought at the top. And this crash lasted 5 months before the market decisively turned around. It then took another 15 months to get back to even. But after that, the price rocketed for the next year, turning your initial $18 investment into a high of $1,200 for a 6,566% return. And that's just after a year and a quarter ago being down as much as 88%. Quite a turnaround. Alas, to the die-hard buy and hold investors, that 6,566% return would soon evaporate away into only an 1,011% return, as Bitcoin promptly crashed again from $1,200 down to $200. This crash lasted from 2013 1125 through 2015 921, or about 22 months, until the price really reversed direction and was by far the longest bear market in Bitcoin's history. Then we had a slow and steady bull market that went parabolic by the end of 2017, turning the $200 low from the last crash into as much as $20,000 for a 9,900% return this time around. The idiots who bought at the top at $18 in 2011 but held to today are still up 43,233% as of recording this video. So if you bought Bitcoin near $20,000, there's still hope for you if you can be patient. Now, if you bought the 2013 top of $1,200, you'd still be up 550% today. And if you bought near the 2015 low at around $300, you'd be up 2,500% today. The 2011 crash was over in 5 months, and the 2013 crash lasted 22 months. So just how long will the 2018 crash continue to lag along? It's now 6 months since we've hit a bottom and 8 months since Bitcoin's volume has recovered or hit a new high. Let's examine my favorite indicator, trading volume, to begin examining these crashes. The earliest trading volume I can find starts in July of 2010, and we can see a gradual growth of trading volume as Bitcoin rose from 10 cents up to a high of 32 by June of 2011. Although you'll notice a 6-month relative slowdown in volume right before the biggest gains occurred. Incredibly, despite crashing from $30 to as low as $3 for a 90% loss, the trading volume stayed consistent for the next 2 years until a slowdown in November and December of 2011. This time, a pop in volume followed by a slowdown resulted in Bitcoin's doubling its price in a single month. Trading volume spiked again, and then slowed down once again. This time, Bitcoin jumped from $200 to $1,200 in a single month for a 500% return. What happened next would have been hard to ignore, as Bitcoin's trading volume disappeared, crashing by 90% as the price lost half its value. However, after reaching a low in trading volume at $600, Bitcoin crashed another 63% to $300 as it rebuilt its volume strength. Trading volume slowed down after spiking into its recovery from $244, and then the price rocketed up once again. Which brings us to present day, where Bitcoin potentially hit a bottom on June 28th, touching $5,700 after a 6-month crash, leaving us all wondering where the true bottom lies. This is the worst 5-month stretch for Bitcoin in history, and despite the market crashing, its trading volume stayed strong. In the next 16 months, the market delivered 50% gains in a single month, 5 times out of 16 total months, with only 2 months actually delivering a loss. And eventually this led to a 470% return in a single month, followed by the next major crash for Bitcoin, handing out 10 to 30% losses in 9 out of 16 months, with plenty of head fake months during the crash from November of 2013 until January of 2015. In 2018, we've had big up months, but even bigger down months, confusing the hell out of investors. 39% up, 25% down, flat, 30% down, 33% up, 18% down, 14% down, 20% up. In the grand scheme of things, the true answer to this question might just be, who cares? Assuming Bitcoin doesn't completely die, and I'll cover why it likely won't, I think we can assume the maximum loss for Bitcoin would be a total 90% collapse, taking Bitcoin from $20,000 to $2,000. So that's another 75% lower from today's price of around $7,500. But yet, if we hold on, no matter what, and the market follows its trend of adding a zero to the price of Bitcoin every 2 years, Bitcoin could grow to $100,000 by 2019. So we're looking at a potential 75% loss from here versus a potential 1,150% return, or a 15 to 1 reward to risk ratio in the next 24 months. For every $1 you might lose, you stand to potentially make $15 at this very moment. Yet if you hold out and catch Bitcoin at $4,000 or $3,000 or even $2,000, you might improve your risk-reward ratio to be 30 to 1, 45 to 1, or even 60 to 1. Catching even lower prices pushes your potential return from 1,150% up to 2,400%, up to 3,233%, and if you're really lucky and catch that $2,000 price, you could potentially return 4,900%. So is it prudent to wait for lower prices? During the 2013 crash, volume crashed as well by 90%, as Bitcoin went from $1,200 down to $600. And then it continued to crash down to $230 as volume slowly grew back before the price rebounded. And this was by far the slowest recovery Bitcoin's ever had, lasting 22 months. However, in 2011, the trading volume held strong and steady, and the crash only lasted 5 months. Using CoinMarketCap data rather than Invest.com, which appears to only track Bitfinex's volume, which was a major exchange in the older dates we've been studying, we can see trading volume is currently down 75% overall for Bitcoin. the $20 billion a day at the top of 2017 is now trading as low as $2 to $3 billion a day in July, averaging about $4 to $5 billion a day in early August. So we have seen a crash in volume with a relative recovery beginning. But are we really out of the woods yet? We're trading at $7,500 from $2,700 at this same time last year, up 177%, while trading volume has rose from $1 billion a day to $4 billion a day for a 300% increase in trading volume year over year. For every 1% in volume increase, we've seen a 0.59% growth in price. If we go back one more year, trading volume was around $100 million a day, and the price was only at $655, providing year-over-year growth of 312% in volume and in price, and 900% growth in volume. During this time period, we only saw a 0.33% price growth for every 1% growth in volume. And if we go back another year, Bitcoin was trading at $280 with $20 million a day, providing a 133% return in the upcoming year with 400% volume growth. And during this period, for every 1% in volume increase, we saw that same 0.33% price growth. A year prior to that, right after the 2013 crash in August of 2014, the price was at $588 with trading volume still around $20 million for a near flat return from 2013 to 2014 as volume and price stayed relatively the same. And if we go back another year, CoinMarketCap does not have the trading volume, but the price grew from 550% from August 2013 until August 2014. In the past 5 years, there's never been a negative return on Bitcoin year over year starting in August. And the year-over-year growth in trading volume from 2017 to 2018 suggests Bitcoin is not going anywhere and will gradually continue its ascent as demand spreads worldwide. However, the 75% collapse in trading volume from the recent high, as well as the unusually high 0.59% volume growth over price growth, suggests there could very likely be more downside ahead. We are seeing volume recover, but if you go back to the longest bear market we witnessed, this was not the sign of the bottom. And it's important to remember, as Mark Twain said, history doesn't repeat itself, but it often rhymes. So what might send Bitcoin higher or shorter in the short term? A Bitcoin ETF being approved by the end of 2018 could rocket volume levels to all-time highs and push Bitcoin to $100,000 or higher in 2019. But what might push Bitcoin to $2,000 or $4,000 from here? Well, perhaps the opposite happening could be the catalyst to do such a thing. If the CBOE ETF was denied, that could certainly hurt the hopes of maintaining the current $4 billion a day volume levels, and that's $7,500 price level, which ultimately might trade closer to $6,000 a day with only $4 billion of trading volume, could quickly shrivel up. So looking outside of the ETF, what might stabilize Bitcoin's prices, but perhaps not necessarily push them higher right now? How about collapsing currency rates in weak countries around the world whose citizens are looking for an international form of money that won't lose its value? For the last decade, central banks have been flooding the world with money, and the Fed is starting to reverse this process, and other central banks are likely to follow suit. Many countries' currencies against the US dollar are losing value, such as the Iranian rial, who's seen annual inflation rate as high as 203% in 2018. Meanwhile, a cup of coffee has gone up 60,000% in Venezuela as they are now experiencing hyperinflation. And meanwhile, China, in order to compete in world markets, for the bulk of their economy being exports, have been devaluing their own currency, which will make imports incredibly expensive for its citizens. And even here in the States, America continues to devalue the dollar by creating more and more debt. And in this chart, we can see the annual change in federal debt has almost always been positive, except for 2000, right before the dot-com bubble exploded. And so emerging markets like the ETF EM are already down 50% in anticipation of rising interest rates and dried liquidity. So the bottom line is we have a lot of people around the world who have great reason to buy Bitcoin. Their local fiat currency is slowly losing its value and in some cases quickly losing its value. So if you're really worried about Bitcoin going lower from here, you might consider investing 1/3 today, 1/3 in 3 months, and another 1/3 in another 3 months. But if you don't take action, you may just miss out. The long-term picture is clear. The market's already down 65%. Volume is 300% higher than it was this same time last year. And now there's 217 trillion reasons why Bitcoin will keep going up. That's the total global debt. And meanwhile, the purchasing power of $1 in the last century has gone from $1 down to 5 cents. And from 10 cents down to 5 cents just in the past 3 decades. So thank you for your time, and look for a new update Monday.